your stories,
your freedom.
The Peter Schiff Show.
Welcome, everybody. This is Peter Schiff here at schiffradio.com on a Tuesday. And again, we are broadcasting live from Los Angeles. Hope my voice holds out for this entire show. You know, I had my meeting last night in Orange County. We had a lot of people there. I think we had over 650 people. We had to open up the balcony. That gave us some extra seating capacity. So it was a great crowd down there. I had a big day. I was talking all day, and so hopefully we'll see if I can manage to continue to have a voice throughout the next 2 hours. Anyway, I do have a great guest coming up at 10:30. Member of Parliament, John Hannon, is coming on, and he was actually on the television show with me. I think it was Huckabee on Fox not too long ago, so that was fun being on television with him. He says a lot of the same things that I do, except he does it with an English accent, so I guess it sounds a lot more intelligent. But anyway, the number to call, 855-4-SCHIFF. If you want to be a part of the show, probably would help to have some calls in here, because that means I won't have to talk the entire time myself. So 855-4-SCHIFF, 855-4-SCHIFF. And again, remember, I will be speaking again today in Los Angeles, tonight at UCLA. Last night it was actually at UC Irvine. Tonight is at UCLA at 6:30. That's following the debate that I'm going to have that is hosted by the economics department of UCLA. That debate is at 4 o'clock. And I originally said on this show that it was not open to the public, that it was only for UCLA students. Apparently that was not correct. Anybody can go, although I think they only have a small seating capacity, maybe about 150 people. So you don't have to be a student to attend, but depending on how many people show up, most people won't be able to. But I guess if you get there early, you might be able to get a seat. It should be it's actually a three-way debate between the dean of the economics department of UCLA, one guy that represents the real Keynesian left wing, and then me. I'm not really sure where the dean of the econ department falls on the economic spectrum. I guess I'll find out there tonight. Maybe he's somewhere in the middle of the road. I'm not quite sure. Anyway, my guest, Daniel Hannon, is going to be here at 10:30. So if you do want to call in, relatively soon. Otherwise, you're going to be holding on throughout the second half hour for your calls to come in during the second hour of the program. Anyway, oil prices continue their ascent. We're now at $96.50 on the price of crude oil. The chart looks very, very strong. Nobody really seems to be talking about this in the media, this relenting surge in the price of oil. Since oil bottomed just over a month ago, October 4th, it's only been about a month, oil bottomed out just below $75 a barrel. It's now at $96.50. What is that, like a 20-something%, 25% increase? This is a big, big number. And, of course, it's not just oil prices that are going up. Commodity prices across the board keep going up. I read an article today on W.R. Grace is increasing the price of its masonry products, its concrete, by 5 to 10%. And this is in a slump, right? We're having a big construction slump in the U.S., yet still prices of this basic building material is going to go up by 5 to 10%. And of course, that's not all that's going up. A lot of things. That's just one story that I read. But prices are rising. I'm here in California, and I'm seeing gas prices as I'm driving around just a hair under $5 a gallon. I mean, it's some expensive gasoline here in Southern California. It's about to get even more expensive as crude oil prices continue to rise. In fact, I think the next resistance is the high from July, which is just over $100 a barrel, 162. But we take that out, and then you're going to have oil prices that are, I guess we did get up to 115 back in May of this year. So we did have a pretty big run. So after we get above 100, I'd see that's the next key resistance. But, that's a pretty big number to get up to $115 a barrel. But we could do it. We might be able to do it by the end of the year. And if we take out that number, then there's really no resistance. Once we get above there, all you got is the $150 high for oil. which was prior to the collapse back in June of 2008. We could easily get there, I think, before the presidential elections, maybe well in advance. And so maybe that will put inflation and the commodity prices back on the front burner. Don't know how President Obama is going to try to tackle this issue by executive order. Maybe he's going to try to just issue an executive order that gasoline prices be lowered. Apparently now, I'm looking at it, President Obama is threatening that if Congress doesn't pass some of these tax credits that he's talking about for hiring veterans, that if Congress doesn't pass it, the president is going to enact it himself by executive order. I don't know. I mean, where is he getting the idea that he can do all this? And where is the opposition? Remember, by executive order, he basically forgave. My best guesstimate is that of the $1 trillion in student loans, based on what Obama has done, I'd say $500 billion of it has been forgiven. So that's $500 billion that no longer has to be repaid by the students who borrowed it, but instead has to be repaid by the taxpayers who were not even involved in these decisions. And also probably, another several hundred billion based on the mortgage modification bill that he signed by executive order. Now he's saying he wants to implement tax credits for hiring veterans by executive order as well. Here, take a listen to him. This threat. It's cut number 7. I don't know. Apparently the sound isn't there. I don't know why it's not there. I have it on my end, but none of the sound is there. Anyway, I wanted to mention I've been getting a lot of emails again lately from the National Inflation Association. So people have asked me about it. They've been touting this special report for Chinese stocks. And, of course, nobody should buy that report. You never want to send any money to this organization. It's only a matter of time, I think, before, just like Gold Line, there's going to be some criminal charges filed. The problem is it takes the government so long. The wheels of justice turn so slowly. The regulators are too busy harassing legitimate firms that the criminals are allowed to continue uninterrupted for many, many years before justice finally catch up to them. And by the time they end up getting charged, they either flee the country, or even if they get caught, their victims are broke because the money has already been stolen. And, of course, those stealing it are likely spending it very quickly. So there will be very little for the victims of these frauds to recover. But one of the things that they're doing is they've been touting this China report, and they mentioned their favorite Chinese stocks that trade in the United States. And, of course, a lot of these stocks are very thin. A lot of the Chinese stocks that trade here don't do a lot of volume, and so this is ripe for pump and dump type activity. And so they put out this report, and now I keep getting emails because they're trying to get more people to buy the report, to buy these stocks. And basically what they're saying is you got to buy these stocks because look how much they've gone up, and they're touting how much the 5 stocks they recommended have gone up, as if the fact that they've gone up is somehow indicative of the fact that they picked these great stocks and they went up, and the people who bought them have made all this money because the stocks have gone up. The reality is the people who bought them are the reason the stocks went up. They haven't made any money because they haven't sold. They paid the high prices. If you tout a thin stock to a large group of unsuspecting investors and they rush out and buy the stock, the price is going to go up. It's not up because the company is doing well and it just went up, and the people who bought it at the low price and made money. It went up because the people foolishly bought it and they paid those higher prices. And now they use that big move up to try to convince more suckers to buy these overpriced stocks on the false basis that somehow they've uncovered these hidden gems. Now, anyway, I got more to go on the Peter Schiff Show. We got a commercial break. We'll be right back on SchiffRadio.com.
The Peter Schiff Show. Since the Peter Schiff Show was last on the air, the national debt added another $7.89 million. Luckily, Peter's intelligence is growing twice as fast.
That's incredible.
Welcome back to your source of sanity in an insane world. It's the Peter Schiff Show.
And it is Peter Schiff here at SchiffRadio.com. We are taking your calls live from Los Angeles, California. 855-4-SCHIFF is the number to call, 855-472-4433. If you want to come join the discussion. Before the break, again, I was talking about the latest NIA, I guess, pump and dump research report, research, of course, in quotes that they've put out, that they're now touting based on the fact that all the stocks that they recommended have gone up so much in the week or so since they recommended them, trying to create the false impression that if you bought the stocks, you made all that money, and the reason the stocks are up is because the market just likes them so much and they happen to have gone up. That's not the reason they've gone up is because they supplied the buying. Their people went in and took these thinly traded stocks and ran up the price. That's why they went up. It has nothing to do with the research that they did. Now, I don't even know what these stocks are because I'm not going to pay any money to get the report. But I don't even care what they are because I know what their modus operandi is. I know how they operate. You know, the first stock that I brought up when I first saw their pump and dump piece was this one, Mega Precious Metals. And when they recommended Mega Precious Metals, the day before they recommended it, it was at 37 cents. The very next morning, it gapped up to 60 cents. That's where all their people started to buy it. And they kept pumping it and pumping it and pumping it. And they got it to go as high as 93 cents. And, of course, as it was going up, they're talking about how great it is. This is the greatest stock ever. We're so great. Look how much money everybody's making. Today, that stock is back at 45 cents. It's lower than it was the first day it came out. People are probably down anywhere from 25 to 50% who bought this stock based on their advice. In fact, over the last 6 months since they've recommended it, there's only about maybe 5 or 6 days where it's traded lower than it is today. And several of those days are yesterday and the day before. So, I mean, hardly anybody has made any money. The only people who made money on this stock are the people who sold it. The people who bought it are losing money. The people who sold the stock might have made money, and they sold it because they were selling it to other NIA members who didn't realize it was a pump and dump. I have no idea how much the NIA principals made off of this thing. They probably made a lot of money off of it. But their subscribers collectively have lost a lot of money. Now, I remember when this thing first came out, they were saying this stock was so undervalued that they would never recommend another stock as long as the stock was so undervalued. Meanwhile, they've recommended a bunch of stocks. The same thing is happening with all those stocks. Yet here this stock is lower than it was the first day they recommended it. And in fact, the interesting thing is they recommended it 6 months ago. Had you simply bought the Huey, the gold stocks index, 6 months ago, when NIA recommended this stock, you'd be up 17% right now because the index has gone up 17%. But if you bought their favorite, most undervalued gold stock in the history of the world, you're down 25% if you did that at the same day. That is the reality. Yet this organization continues to pretend that they're doing all this research, their members are making all this money. The whole thing is a scam. I don't know what is taking the SEC so long. So many more people are being victimized. I mean, what's the point of even having an SEC if you have a clear-cut case of these of securities fraud? Yet it continues without any interference. Anyway, I've got the sound cuts now. Apparently, they're all ready. So before the break, I wanted to talk about President Obama's threats to pass via executive order a bill that Congress is not acting on. Here, this is cut number 7.
What I've also said is that I'm going to do everything in my power as the head of the executive branch to act on behalf of the American people, with or without Congress. We can't simply wait for Congress to do its job as Commander-in-Chief. I won't wait, nor will I let politics get in the way of making sure that veterans share in the opportunity that they defend. If Congress won't act, I will.
All right, so first of all, he's saying he's going to do everything in his power. This isn't in his power. It's outside his power. So he's going to usurp power, and he is going to legislate by decree, by proclamation, as if he's a dictator or king. The whole point is that Congress has to pass this stuff. All he can do is sign it. And what is he talking about doing? He wants to create these huge tax credits for hiring veterans. I think the whole thing is going to be a boondoggle. I think if they pass this, I think you're going to have the creation of phony jobs, no-show jobs, where people pretend to hire veterans simply to get a tax credit. It's going to be all kinds of fraud. And to the extent that there are legitimate jobs that are given to veterans because of this tax credit, it will simply come at the expense of a job that would have gone to a non-veteran. Now, I certainly think it makes sense helping veterans, but to say, look, we're going to make it more difficult for people who aren't veterans to get jobs. This is not a job creation bill. If anything, it's a job redistribution bill where the jobs that would have been created anyway will be directed by government incentives to a certain class of people at the expense of other people who are losing employment opportunities that might otherwise have been there for them. So the whole thing is a sham, and yet he's threatening to cram it down our throats whether we want it or not. Where is the outrage? Where is the Supreme Court? I mean, it really is crazy to watch this happen, and nothing. I mean, if again, I said, if the president can take that student loan bill and that was passed by Congress that capped the payments to 15% of income and forgave it after 25 years, if he could just change it to 10% of income and forgiven after 20 years, why did he even need Congress to pass it in the first place? Why didn't he just enact it by executive order? And in fact, if he can lower it down to 10%, he can lower it down to 5%. He can forgive all the loans by executive order. He can sign an order and he can say that Americans don't have to pay any of their student loans back. He can sign an executive order forgiving all credit card debt. He can forgive all mortgage debt. I mean, does the president really have the power to forgive debt? I mean, where is he finding this in the Constitution? Anyway, let me go to the phones. I got John on from San Diego. John, welcome to the show.
Hey, Peter, can you hear me?
Yes, real quick. We're running out of time on a segment.
Okay. Yeah, so I had a question about China. So they supposedly have a trade surplus with us. And the wisdom, I guess, nowadays is to deflate their currency so they can have a trade surplus. But
well, no, they don't supposedly have a trade surplus. They have a huge trade surplus, and they're inflating their currency. That's what they're doing now. They're creating inflation so that they can keep selling products to us that we can't afford.
So, but my question was, we know that we're inflating quite a bit. So doesn't that mean that China's actually inflating a lot more than us to keep their currency low versus us?
They are. Well, what's really happening is they're importing all of our inflation because we're printing all this money, but instead of the money staying in America, bidding up prices here, the money goes to China, bidding up prices there, as the Chinese print up RMB to buy up dollars. But, of course, our inflation is actually a lot higher than we think because our numbers are phony. Probably the Chinese government's numbers are more honest when it comes to reporting their CPI numbers than our government is about ours. But, yes, we are creating inflation and exporting all around the world. And eventually the world's going to tire of it, and then it's going to stop taking our inflation, and we're going to be stuck with it. Anyway, we got a guest coming up, Daniel Hannon, member of European Parliament, will be joining the show when we get back, so stick around. It should be an interesting discussion. You're listening to Peter Schiff on SchiffRadio.com.
I ain't going to front you this time. Oh, no, because you
Show.
turned on me for the devil you know.
We now return to the Peter Schiff Show. Call in now, 855-4-SCHIFF. That's 855-472-4433. Rebel Radio, the Peter Schiff Show.
This is Peter Schiff here at SchiffRadio.com, and joining the show now is Daniel Hannon, who is conservative member of the European Parliament. He's represented Southeast England since 1999. He is also the Secretary General of the Alliance of European Conservatives and Reformists. There might be a small group over there of European conservatives. I'm not really sure. Maybe they have their meetings at a card table. He's also a writer from the Daily Telegraph since 1996. And, of course, Daniel achieved some bit of international notoriety for a viral YouTube video of a speech that he made in March of 2009 criticizing the British Prime Minister for the way he was reacting or the response to the global financial crisis. Anyway, it's been, about 3 years since that speech. Daniel, welcome to the show.
Hi, Peter. It's nice to be on.
Thanks for coming on. So, what's happened in the last 3 years over there in the UK? Are they making as many mistakes as we are over here in the United States, or are they making a little bit more progress in reining in some of the excesses in government?
Well, what's happened in short is that the money has run out. I mean, 3 years ago I warned that the money was about to run out, and we've now got there. Our treasury is empty, our credit is exhausted, And governments in Europe and in the UK and in the US are all responding in the same way by accelerating the policies that created the disaster in the first place. You know, you were one of the people who famously saw this coming, that the problem was that we were increasing demand without producing anything. And around the world, governments have said, right, in crisis, let's do that even more. Let's cut interest rates even more. Let's have quantitative easing, anything to boost consumption. Of course, that is precisely the medicine that made the patient ill in the first place.
Sure. Do you think though, if you compare, let's say, the U.S., the UK, and then the Eurozone, where do you think the UK fits as far as reckless irresponsibility? Are they worse than the U.S. or not quite as bad, or from your perspective?
It's an interesting one. Total government spending in the UK is higher now than it was in the final demented, profligate month of Gordon Brown's premiership. However, if you drill down and you look at why that is, it is fair to say that there has been a squeeze on departmental budgets. The discretionary spending of the state has fallen. The main reasons why total spending is increasing, despite the pressure on individual departments, is, first of all, interest payments on the debt that Gordon Brown ran up. Secondly, the automatic stabilizers. Tax receipts are down because of the downturn, and welfare payments are up, even though some individual welfare entitlements have been reduced, but more people are claiming them. But then the other reason why it's going up, and this is the real problem that we have all over Europe, is that the EU budget keeps on increasing. And so we're in this extraordinary situation where the 27 members of the European Union at a domestic level are cutting spending, but every penny that they save is being soaked up by Brussels.
And what is Brussels spending it on?
Oh, I mean, austerity doesn't begin to feature in their mindset. There was the single biggest reason that they gave for wanting the extra money is that they're setting up a kind of foreign office, a Brussels diplomatic corps called the European External Action Service. I drilled down to see what was so expensive about this, and among the other revelations that came out was to go to a particular summit meeting in Russia, in the same place. The President of the European Commission and the President of the European Council had flown separately in private jets from Brussels, departing within 4 hours of each other to the same destination. So this is where the money is going. Austerity is for street sweepers in Sligo, for classroom assistants in Corfu. It's not for bureaucrats.
Yeah. So now, what's your take on what's happening in the Eurozone members that share the euro currency, and the crisis now unfolding in Greece and now threatening to move over to Italy? Have you been very vocal in your criticism of the way this situation is being handled, and how would you recommend what would your advice be for Germany and those nations sharing that currency?
Right. Well, this is the extra dimension of problems that you happily do not have in the United States. You made the mistake, as we did, of bailing out industries and banks and so on. The Eurozone has gone further and started bailing out whole countries, which is a kind of logical extension once you begin down that path. Now, obviously, what Greece needs is a devaluation. It's what any other country would do in that situation. That's not to say that a devaluation would solve all of its problems. You know your Austrian economics well enough to know that that's not the case. But it would buy them time to make some of the necessary structural reforms. Well, they can't price themselves into the market because they're crucified by this overvalued exchange rate within the euro. And so we're in this crazy situation where the southern European countries, Greece, Portugal, Spain, Italy, are being obliged to follow policies which are bringing them permanent deflation and poverty and emigration, while the northern countries, the core countries, Germany, the Netherlands, Austria, and so on, are facing these enormous tax rises to pay for the transfers to the Mediterranean countries. Both of them are worse off than they would be if they were able to tailor their monetary policy to suit their own needs. And what's actually happening is that the bureaucrats, the elites in all of these countries, and in Brussels itself, are sacrificing the interests of their people to the goal of keeping the euro together.
Well, that's obviously their political goal, but why do you think that, let's say, the Greek people would be better off with a devaluation and, of course, a massive inflation, because a devaluation of a currency would simply raise prices dramatically and diminish their standard of living? Why is inflation, right, a devalued currency, better than simply a default where you just acknowledge that you can't pay and then just don't pay back your debts. I mean, why is it better to try?
I absolutely think they should default as well, no question. And in fact, their primary deficit on most projections will be eliminated sometime in the next year. So the main chunk of the Greek deficit now is their interest payments. And this has been the craziness of the European Union's policy, that there's a debt problem and they try to treat it with more debt. You know, you do not help a friend in debt by pushing more loans on him, and nor do you help a country in that situation. All I'm saying is that in the normal scheme of things, if a country found itself with this massive asymmetric shock, that it suddenly, you know, as in Greece's case, when they looked at the books, they discovered that the previous government had basically lied about the statistics. They suddenly discovered overnight that their deficit was not the 6% that had been declared, but was in fact 11-point-something%. In that situation, the currency can act as a short-term shock absorber. I agree with you. It doesn't solve anything in the long term. It simply shifts from it's a subsidy from importers to exporters, if you like. But it does allow the government in the immediate term to kind of meet its bill. Mm-hmm.
And ultimately, I think the good news would be to the extent that if they did default and they had problems borrowing money, the government would be forced to cut spending, and it wouldn't be. See, I think right now there's a lot of opposition internally because the austerity is perceived to be to bail out, you know, foreign banks, and Greeks might. Well, why should we take these big cuts just so we can send money to Germany? I think if the foreigners were out of the equation and basically they had no choice because they couldn't borrow any money anymore, and the government was forced to cut back, and all the benefits of the cuts in government spending could go directly to the Greek people, they'd be more likely to want to accept them if they think the main beneficiaries of their sacrifice is some foreign banker.
Yeah, you're absolutely right. I mean, it's very important to get the vocabulary here correct. When people talk about rescuing Greece or bailing out Greece or helping Greece, as you say, you quite correctly, Peter, that the bailout money is not going to the Greek people. The bailout money is going to rescue some very wealthy European bankers and bondholders from the consequences of their own malinvestments. But the repayment is going to come from Greek taxpayers. So you can totally understand why they are objecting to the loans for austerity deal that Brussels has imposed on them.
And of course,
what's fascinating is that their politicians have lined up with Brussels against the Greek people. There is now what they call a national government in Greece. In other words, a coalition of the two big parties. But it's not a national government that's speaking for the nation. It's a national government that has been formed for the sole purpose of driving through a policy that the nation rejects.
Yeah, and of course the real problem here is that you also create the moral hazard that lenders now feel that, well, you know, we can loan money with impunity to these governments no matter how indebted they are because we're going to get bailed out. We don't have to worry about the ability to repay based on a tax base. But, you know, you're talking about what's, you know, the U.S. being behind Europe. I think we're actually further down the path. You just haven't noticed it yet. But if you look at our student loan situation, our students owe more money than Greece. We have $1 trillion in student loans, and basically with a swipe of a pen, the President of the United States just forgave about half of it and took about $500 billion of student loans and put it right on the American taxpayers as a secret part of our national debt. And because we've now told U.S. college students that they can borrow as much money as they want and not have to pay it back, the cost of college tuition is about to explode even higher. That could be the next subprime, absolutely. And also, you know, let's say a hard thing that needs saying. It's not in anybody's interest for a huge chunk of the population to be picking up Mickey Mouse degrees at university. It doesn't suit everybody, and it takes people out of the economy in what's often their most dynamic and productive period and saddles them with loans that are never going to be repaid by the value of their degree. Oh, that's a whole discussion of how the government is responsible for these inflated tuition prices in the first place. But my point is that this is a bailout that is bigger than Greece by an enormous magnitude. What has just been absorbed by the American public, and it gets very little cover in the media, how the national debt has just jumped by such a huge block. And, you know, the dollar barely suffers now. I mean, interest rates are still practically zero. And you're talking about how the European nation they're bailing out countries. Well, we're going to be doing the same thing with the states. We've got a lot of states in the United States that have made a lot of promises that they can't keep. In fact, I read a story today.
Absolutely. No, if you look at all the off-balance sheet stuff, if you look at the level of corporate debt, of personal debt, then the situation of the West in general is dire. But, you made a brilliant point a moment ago when you said it can be the best thing for a country to default, because then nobody lends it any more money. And that obliges a government to do something which it never does in any other circumstances, which is to live within its means.
Well, we got to live within our means here. We have a quick commercial break. We will be right back. Don't go away. You're listening to the Peter Schiff Show on SchiffRadio.com.
The Peter Schiff Show.
To President Obama, Secretary Geithner, Madam Pelosi, and all of the socialist econ professors across America.
We're sorry. Peter Schiff is back on the air.
And this is Peter Schiff here at SchiffRadio.com. We're speaking with European Member of Parliament Daniel Hannon, who is also the author of the book, The New Road to Serfdom, a letter of warning to America, which I understand, Daniel, is now available in paperback here in the U.S.
Yeah, it's just come out in paperback. You know what, Peter, talking about books? I was reading your book, like all sensible people. I've read How an Economy Grows and Why It Crashes. And it occurred to me, you use this fantastic metaphor, or this symbol of, what if you had an economy based on fish? There was a country exactly like that, which is Iceland. And Iceland is a fascinating example of what happens when you can't bail out your banks. The Icelandic banks were too big to bail out, so they didn't have the option of assuming the bank liabilities as happened in the rest of Europe. Now, Iceland has got an incredibly far-left anti-growth government at the moment. But even despite that, Iceland is outperforming most of the Eurozone crisis countries that we were talking about, Ireland, Greece, Spain, Italy, and so on. Yeah. What happened when they couldn't bail out their banks was that some people lost paper fortunes. Some people who on paper were billionaires woke up the next morning and they were only millionaires. But you know what? In the real world, nothing has changed. The aluminium is still being smelted. The trawlers are still bringing in the fish. The sheep are still lambing. The credit boom was non-existent, and therefore the crash has not affected Iceland in the way that the countries which have stupidly assumed their private debts and socialized the losses are now being dragged down by them.
Yeah. Now, over here, there's a lot of talk. A lot of investors in America are thinking that the collapse of the Eurozone is an event that's right around the corner, that this whole thing is about to collapse, that it's going to break apart, that the lira is coming back, the peseta is coming back, the mark's coming back. Do you think that this kind of event is that close, or if the euro does break apart, do you think it's something that might happen in the distant future?
I really would not underestimate the extent of political will invested in keeping the euro together at almost any price. There are all sorts of logical reasons why it would be better to let each country pursue its own policy. But in practice, if we were thinking logically, we wouldn't be in this situation in the first place. Now, there are one or two specific question marks over one or two specific countries, notably Greece and possibly Italy. But the tragedy of the euro, when we talk about the crisis, the tragedy of the euro is not that it's going to break apart, but that it isn't breaking apart, and that preventable poverty is being inflicted on millions of Europeans in order to save the faces of the people who said that monetary union would be a good idea. So, I expect this to last for a long time because it is in the interest of the European elites to keep it going.
Yeah, that's been my feeling, and I've thought that as a result, I think you're going to have a pretty big rally in the euro against the dollar, because I think there's the big short position has been built up in the euro, and I think that the major currency that's going to have a crisis is going to be the dollar. I think this dollar crisis could hit maybe as soon as 2012, and that I think is going to be the real problem for the world. You talked about the Greece and how much interest payments on their debt is. Well, if we have a loss of confidence in treasuries and in the dollar and interest rates move up, we're in the same situation because we have, a $15 trillion debt, not counting the things like the student loans and the mortgages, but it's all financed with T-bills. And when interest rates go up, all of a sudden it could cost us $1 trillion a year just in interest payments on the national debt, which would probably it could be more than 50% of what the government was collecting in tax revenues. Because, of course...
it's possible to have a dollar crisis and a euro crisis simultaneously, and indeed we have been doing so in the last couple of years. The only the only thing that would prevent a euro bounce back is this. The euro is now talking about leverage on an almost unprecedented and previously unimagined scale to keep things going. They're talking about going out and borrowing €1 trillion, $1.4 trillion, in order to keep the bailout funds topped up. Now, first of all, nobody has that money lying around. You know, the Chinese have made it very clear that they don't have a trillion euros, and if anyone did, you know, if the Brazilians or the Indians or someone had it, you know, they'd have found a use for it in the past 4 years, given what's been happening. But the real problem is that nobody is guaranteeing this money. Ultimately, the money is being guaranteed by European taxpayers. So the debtors and the guarantors are the same people, which is, you know, it's a kind of Ponzi scheme. It's not getting new money from anywhere. The only way, it seems to me, that the Eurozone members will be able to get around this problem is by printing lots of money. I don't really see how else they're going to be able to deal with their debt. And that's what stands in the way of a Euro revival.
Well, I'm only talking about a euro revival against the dollar. I'm not talking about a euro revival against gold. I mean, I think you're going to...
Exactly, but what we've seen so far is that the big currencies, sterling and the euro and the dollar, have all been doing badly. It's everybody else who's doing okay. It's the Australian dollar and the Swiss franc and so on. They're the ones which have been doing fine. There is a particular crisis in Europe and the US. There is not a global crisis on the same scale.
Well, the global crisis is that the rest of the world is loaning the United States money. They're loaning some money to Europe, but on a much smaller scale, because Europeans, there's still a lot of savings within Europe, and so there's still a lot of European debt held by Europeans.
Correct.
But you've got all this U.S. debt held by the Asians, predominantly foreign central banks. But I think that what's happening in Europe has taken a lot of pressure off the U.S., off the dollar. It has allowed us to really run up much, much bigger debts than otherwise would have been the case had there been more skepticism about the problems over here. So I think we've actually benefited from what's happening in Europe. I don't think it's hurting us, at least to the extent that this phony economy that we have is still improving. But I wanted to ask you real quick, what was your take on this recent rate cut, a 25 basis point rate cut in Europe, you know, despite the fact that European CPI numbers are at 3% and rising, and the mandate is to have inflation below 2%, yet rates are already extremely low, and they cut them?
It's absolutely crazy. It is exactly repeating what caused the problem. You know, if I were one of those bankers who is being protested and howled about by the Occupy crowds on your side of the Atlantic or on mine, I'd be feeling pretty confused. You know, the world was angry at me because I had made too much credit available too indiscriminately. And now precisely the same people are demanding that we lend even more. And and base rates have come down to that end, quantitative easing, you know. It's the same basic problem. I think it was Mark Twain who said, if all you have is a hammer, everything starts to look like a nail. If all you know how to do is to stimulate consumption, then this is what you carry on doing, however much it has visibly caused the problem in the first place.
Well, that's why I usually you compare it to throwing gasoline on fire and expecting the fire to go out. And, of course, but that's all they have is gas. And so every time they throw it on the fire and it gets bigger, they just pour more gasoline. And it's never going to stop until the fire, you know, is an inferno. But
we
anyway,
may be very close to that point now, Peter.
I'm afraid that we are, but I do think that we're going to meet our demise here in the U.S. just before Europe. I think we win the race to the bottom, unfortunately.
Well, we're racing you.
We've got a head start on you, though. But anyway, hey, Daniel, thanks for coming on the show. Keep up the good work. As I said, we need you on this side of the Atlantic. I wish we had you over here in Congress instead of Parliament. Anyway, good luck, and good luck with the book. We will be back. We got another hour coming up on the Peter Schiff Show here on SchiffRadio.com.
The Peter Schiff Show.
Make no friends in the pits and you take no prisoners. 1 minute you're up $500,000 in soybeans and the next, boom, your kids don't go to college and they've repossessed your Bentley. Are you with me?
The revolution starts now.
We have to pass the bill so that you can find out what is in it.
Turn those machines back on!
You are about to enter the Peter Schiff Show.
Show me the money!
If we lose freedom here, there's no place to escape to. This is the last stand on earth.
The Peter Schiff Show is on. Call in now. 855-4-SCHIFF.
That's 855-472-4433.
I don't know when they decided that they wanted to make a virtue out of selfishness.
Your money, your stories,
Your freedom.
the Peter Schiff Show.
Welcome back, everybody. This is Peter Schiff here at SchiffRadio.com. Hour 2 of the Peter Schiff Show is underway. We're taking your calls, 855-4-SCHIFF, 855-4-SCHIFF, to be part of the show. Thus far, it's a pretty quiet morning. Not a lot of action going on in the stock market. Precious metals are pretty flat on the day. Gold stocks flat. Oil is the one standout that continues to be higher, although it's off the highs of the day, but still above $96 a barrel. Bond prices are a little lower. The dollar is a little softer. The euro back above 137, or actually was closed above 137, about 137.50. The yen stronger today. The British pound also rising. It'll be interesting to see if the British pound can get above 160. It's 159. Well, I think 165 maybe is a more of a key overhead resistance level for the British pound to see if it can break out of the downtrend that's it's been in since the financial collapse of mid 2008. Because as we were talking with Daniel Hannon, they have got a lot of problems in Great Britain. But I think despite that, the pound might still manage to gain against the U.S. dollar, even as both the pound, the dollar, and the euro continue to lose ground against gold and continue to lose ground against overall commodities. I think there's going to be a lot of inflation in the United States and in Europe. I just think there's going to be more of it here. Anyway, again, 855-4-SCHIFF. We got plenty of open lines if you want to call in. Let me take a quick call from San Francisco. Andrew, welcome to the show.
Hi, Peter. Can you hear me okay?
Yeah, I hear you.
Hi, I really enjoy your show, and I think you give all of us a great education in economics. And I know that you believe that entrepreneurs are essential to a great economy. And I know that you have recommended the reading list about economics and investing, but can you talk about what are the necessary skills for becoming a great entrepreneur? Can those skills be learned? Are there any books that we can read to learn to be one?
Yeah, that's a good question because I don't have any books on my reading list about how to run a business. I know there have been business books written by people, and I forget even the names of some of the books. I haven't read them myself, but I know there are books out there. I tend to think a lot of what makes a good entrepreneur, though, isn't necessarily something that's learned in a book or learned in a classroom. I think that people just have a knack for business, and I think you have to have, you have to really be a go-getter. You have to be somebody that can do things without somebody standing over your shoulder. A lot of people can follow instructions, can take orders, can do a task if they're assigned to it, but it's very different to be the one that is assigning all the tasks, that's figuring out what needs to be done. And so I think a lot of times, I don't know if they're entrepreneurs or made or born, but I think it is a unique talent, and I think I think the role of the entrepreneur is often much overlooked in modern society, just how difficult it is. And it is a job that governments can't assign. The government just can't say, you got a socialist model where the government is trying to tell everybody what they're going to do. You can't really assign somebody the job of being the entrepreneur because you don't know who's going to be good at it. There's no way to tell. So I think that a lot of it is if you have these instincts and you have the personality or temerity, I'm not really sure the words I'm looking at, that make a good businessman. But I think one of the key things to do is you need to try to create a business in something that interests you, that's something that excites you, something that you're passionate about. Because I think if you're simply motivated by money, it's difficult. I think you've got to have a combination. Yes, you need to be motivated by profits and desire to make money, because if you don't make money, your business can't survive, nor should it survive if you can't make a profit, because it means that you're not creating value. But I think it's a lot easier for somebody to put in the time and the effort that it takes to make a business succeed if they actually enjoy what they're doing, if it's something that they're interested in. And of course, if you are interested in something, you tend to be better at it. And probably some of the things that we're better at, we might naturally like because we're good at it. So you try to find out what you're passionate about, where your interests lie, and try to develop a business. See if you can see a need that is not being met, a demand that you think can better be fulfilled another way. If you think you can build a better mousetrap, and you find a way of building it, and you can run a business. But I do know that the government certainly makes it a lot harder for entrepreneurs to succeed. The bar has been raised. You have to be that much better to be able to succeed in America today, because there are so many obstacles, in your path, so many hurdles that you have to clear in order to be a successful businessman. If those hurdles didn't exist, we'd have a lot more businesses in this country. Far more would be started, and far fewer would fail. Right.
And you seem to be suggesting that, you were either born as an entrepreneur or not. But isn't it true that skills like raising capital can be learned?
That's it. Yeah, that's a banking. Yeah. You can be educated and understand finance and banking, but we're talking about the innate ability to act as an entrepreneur, and I think that part of that might be a talent. Some people have a natural talent for music, or some people are gifted athletes. Now that doesn't mean you can't improve on what your natural God-given abilities are. But I do think that there is, some innate personality or mind that might characterize people who are very successful entrepreneurs. Because I don't know that there's, an entrepreneur course that you can take and say, okay, now I'm an entrepreneur because I took this course. If I could take all the music classes that I want, but I don't think I'm going to be a good musician. I just don't think I have the innate musical talent. I could probably be okay. I could probably, get by. I could probably play something, but I don't think anyone would be buying concert tickets to my performances.
Right. And can I ask you a question about China?
Yeah.
I know that you talk a lot about how fiat money doesn't work, how government manipulated money and interest rate hurts the economy. But if you look at China also uses the fiat money. China is not only gold standard, and the Chinese central bank manipulated interest rates constantly. Yeah. But why?
All of that is hurting China. China would be better off if that wasn't happening. Now, there are a lot of good things that are happening in China. And so the Chinese economy is still growing despite the bad monetary policy that exists. But just because the economy is growing now doesn't validate that bad monetary policy. My point is that if they had sound monetary policy, the boom would be even more spectacular. The Chinese people would be living at an even higher standard had they had sound money as opposed to fiat money. But it doesn't mean you can't have prosperity with fiat money. You can. You're just not quite as prosperous as you would be without it. Anyway, we will be back. We got a lot more of the Peter Schiff Show coming up after this break, so stick around. You're listening to the Peter Schiff Show on SchiffRadio.com.
The Peter Schiff Show.
To President Obama, Secretary Geithner, Madam Pelosi, and all of the socialist econ professors across America.
We're sorry. Peter Schiff is back on the air.
And we are back. This is Peter Schiff here at SchiffRadio.com. Getting a little bit of action in the stock market now. The Dow is down 55 points. We'll see if anything develops here in the next 48-odd minutes remaining in the program. I did the math during the break on the crude oil rise. Crude oil prices now, since their low of October 5th, which is just over a month ago, crude oil prices are up 28%. Yes, I guess there is no pressure on inflation. I guess the Fed can be very, very sanguine and very confident that the increase in consumer prices is transitory. After all, there's no evidence at all in the last month that there is any kind of price pressures coming from things like crude oil. Anyway, let me go back to the phones. I got Matthew waiting on hold in, is that Indiana, Matthew?
Indiana, yes, Peter.
Yeah. Yes, what's on your mind?
Hey, Peter, I'm a big fan of yours. I've read all your books. You taught me a lot. One thing that you did teach me, and I don't hear you say it as much, is 5 reasons why the Fed and the government will always print money. And I got it off of a YouTube, and I kind of rewound it, and I kept playing it. And it really made me understand why the Fed and the government will always print money. And you gave 5 reasons. And the 5 reasons were, 1, they get to monetize the debt. 2, they get to increase the GDP. You know, if prices and things are now twice as expensive, the GDP is only elevated. 3, they get the free money before the prices go up. They get to play with the free money. They get to, buy things before the prices go up. 4, it pushes people all into higher tax brackets. They get more tax revenue. Capital gains taxes are more. And 5, the people feel better. Their IRAs go up. Their stock prices go up. Their 401ks go up. They're more millionaires. They feel better. And because of those 5 reasons...
inflation is a very intoxicating drug because, people like the way it feels initially, but it's all false. And, governments will always choose inflation over honesty. They're not going to admit that they can't pay for things and that we're broke. And, of course, when the government creates inflation and then eventually prices rise, the government is always able to blame the price increase on somebody else. It's always being blamed on labor unions or greedy businesses or the OPEC nations, or it's blamed on speculators. But, of course, the inflation is always caused by the government, but they never will confess to that. Politicians throughout history have always taken the easy road, the easy path, and that path is inflation. And, of course, that's what they're doing.
Oh, yeah, but when I heard you say that on YouTube and you laid it out, these 5 reasons why they'll always inflate, now I'll always see their policies. It's clear as day to me. Well, what are they going to do? They're going to print more money. What are they going to do? They're going to inflate. They're going to print more money. And those are the 5 reasons. And I tell my friends that, and they think I'm a genius. I said, no, I get it from Peter Schiff. That's what.
Yeah, it's not. Well, it's not. You don't have to be a genius to figure out that the government's going to inflate, that they're going to print money, because they'd rather do that. Look, they'd rather finance their spending by printing money than taxing, because if you tax people, then they know who took your money, right? If I have to pay taxes to the government, it's obvious who took my money. But if the government just creates money and spends it into existence, and then my prices go up, but no one took my money, but I see prices going up. To a lot of people, it's not clear why those prices are going up. They don't make the connection between the money printing and the rising prices, especially when you have so many in the media and in academia who make excuses and who try to blame inflation on everything but the Fed's money printing. And a lot of that is because that's what these academics want. They all believe this Keynesian nonsense.
It's insidious and it's silent.
Yeah. Yeah. All right, Matthew. Well, thanks for your call. I'm glad you're reading my stuff. Next up is Tyler calling from Sacramento, California. Tyler, welcome to the show.
Hey, Peter. How's it going?
Good.
Good. I had a question about monetary policy, actually. I was going to ask you about gold and silver throughout American history, but I was on the Internet, and I actually wanted to ask you about the specific reforms in Dodd-Frank and Sarbanes-Oxley that were enacted and how they hurt small businesses and what can be done to sort of reverse those.
I don't even think most of it hasn't even been enacted yet. So as far as my business is concerned, I'm not even sure how it's going to impact me. I know that there were some reforms that have affected some of the larger financial institutions, but as far as what is going to happen to small firms like mine, I have no idea yet. I mean, it's just a complete unknown. I think most of the rules haven't even been written yet. So it's I'm not looking forward to finding out, though, that's for sure.
Are you retroactively informed of those rules, or how do they send out a rule book?
Well, normally when there's new rules that are enacted, you're told, there's some new edict that comes out, and you're normally given a certain amount of time with which to be in compliance with this new rule. And a lot of them will come down through the self-regulatory agencies, through FINRA, some will through the SEC. But no, it is complicated, and you got to figure out what these new rules are, and then you got to figure out how to comply with them. And generally, it ends up creating a lot of extra demand for compliance people and lawyers that have to help you figure out what the rules are and how it is you have to operate within them. But I think it's going to be terrible. I think there's going to be all sorts of bad rules and regulations that are going to result from Dodd-Frank. I just don't know what they are yet.
Nor do I. That's what I was asking.
Yeah, but I know that there has been some impacts already in proprietary trading or things in some of the major banks, but they haven't affected me because I'm not involved in any of that activity.
All right, I appreciate the call. Thank you.
Thanks for your phone call. Next up is Jimmy calling from. We lost Jimmy. All right. Anyway, I think the phone lines are now empty. If anybody wants to call, 855-4SCHIFF, 855-4Schiff. I want to talk a little bit. I don't know if I'll have time really to get into it before the end of this segment, but obviously the situation with Herman Cain is now escalating here with another woman, or now the first woman to actually come public and allege inappropriate activity. Whether or not it's sexual harassment or not, I mean, it's clearly inappropriate if it went on, because apparently this individual did not work for Herman Cain. She was not employed by the Restaurant Association. She was looking for some career advice from Herman Cain. So I'm not really sure the legalities of the allegations, but we now have somebody coming out, and it seems to me it's going to be very difficult for the Herman Cain campaign. It looks very much like now I'm blanking on his name, Gary Hart. When his campaign just fell apart so quickly because he couldn't seem to get out from under these questions. I mean, anywhere he went, all he was asked about was the monkey business, and I think was it Jennifer Flowers, or I try to remember which woman goes with which presidential scandal, because I know there are a bunch of them with Clinton. But now it seems that Herman Cain is just constantly dogged with having to address allegations of sexual misconduct or sexual harassment. It's going to be hard for him to really get back on message or talk about his 9x9 plan when people are a lot more concerned about these three women, and who knows if there's any more they're going to come out. Of course, a lot of people could just make this stuff up. You have no idea. I mean, anybody can come forward and make stuff up. And I don't know why this last accuser needs Gloria Allred. I mean, why does she need an attorney to come out and make this statement? So obviously there's something up her sleeve there. But I want to discuss this a little bit more because there's some more nuances, I think, going on with these allegations. So we'll be back. We're going to discuss Herman Cain and take more of your phone calls. 855-4SHIP. I know the lines are open if you want to call. There's a full half hour coming up, so don't go away.
The Peter Schiff Show.
Everybody else frustrated. I'll be here all the time.
We now return to the Peter Schiff Show.
Call in now, 855-4SHIF.
That's 855-472-4433.
Radio. The Peter Schiff Show.
This is Peter Schiff. You're listening to the Peter Schiff Show on SchiffRadio.com, and I want to talk a little bit about Herman Cain and the sexual harassment allegations that keep coming out. And one of the things that is being made an issue is the idea that, well, this is all about race. Herman Cain is a black man, and that's why this is all happening. I mean, this is all a bunch of nonsense. I mean, a month ago, Herman Cain was still black. None of this was going on back then. The reason was because Herman Cain wasn't a front runner. Nobody cared when people didn't think he could win. It doesn't matter what color he wasn't a threat because he wasn't in the lead. The reason this is happening is because he's the front runner. There have been plenty of white politicians who have been embroiled in some type of scandal. It doesn't have anything to do with race. But, of course, the Democrats, who are always accusing the Republicans of being racist and it's all about race, they're always the first to bring up the racial elements of anything. And, of course, now they're not only talking about the fact that Herman Cain is black, but now it seems that they're up and on, the fact that his latest accuser is white. And now they're thinking, this is going to be really big now because now you have this black man who is accused of sexual harassing a white woman, as if the race of the accuser has anything to do with the accusations themselves, whether they're true or not. The race is immaterial, yet the Democrats are trying to allege that it is, and because the Republicans are just a bunch of racists, that now they're really going to be angry because, hey, it was okay when Herman Cain was sexually harassing black women, but hey, now he's taking it too far, right? Now that he's molesting a white woman, well, hey, now we can't support him anymore. He doesn't know his place. This is the Democrats talking, not the Republicans, just trying to assume that this is the way Republicans would feel. I don't see any indication that that's the case at all, yet the Democrats are the ones that want to make this a race issue. It is not a race issue. Maybe it is a sexual harassment issue, but I don't think anybody in the Republican Party cares what race the accuser happens to be, nor do I think they care what race Herman Cain happens to be. But anyway, let me play a little sound. This is from MSNBC. This is Communications Director of the DNC, Karen Finney, bringing this race issue up on MSNBC. It's cut number 1.
Fascinating. Martin, it is going to be very fascinating to see how this story unfolds over the next several days. It will be particularly interesting to see, I think Torre is going to know exactly what I mean when I say this, how our friends on the right handled the accusations from these women in conjunction with how they handled Anita Hill.
Spell it out. What do you mean, Karen?
How they
what do you
handled
mean?
Paula Jones. Martin, you're trying to get me in trouble.
Well, I guess we have to play the second clip because I guess he's got to drag it out of her on what exactly she means. And, of course, she means that the accuser is a white woman and that the conservative Tea Partiers on her life are just not going to take too kindly to a black man harassing a white woman. But here's the rest of the clip, cut number 2.
Look,
what do you mean? Say it.
Well, look, I think it'll be interesting to see if these guys rally around Herman Cain with as much veracity as they have over the last couple of weeks, now that it's clear, to Torre's point, that a whole other layer of the black sexuality has been infused into this. Because also remember, these women were 10 years younger than we're seeing them now. So that whole power dynamic, this was an older man, this was younger women, white women, black.
Okay, there it is, right? Black sexuality. What difference does it make? How is this black sexuality? Why isn't it just sexuality? I mean, I don't understand. What difference does it make? He happens to be black. This particular woman happens to be right. Is it even germane to the allegations? I don't think so. Do I think that anybody on the right is now going to look at this differently? Because the accusation is from a white woman? I mean, this is nonsense. Only the liberals, this is how they view a conservative or Republican, that it's all about race. It's not about race. It's about race for them. In fact, of course, yes, this woman was younger 10 years ago. Well, so was Herman Cain. He was younger, too. Men age just like women. And, of course, the fact that men are attracted to younger women, that's not news. I mean, of course they are. And it's got nothing to do with race. It's just that's just the way it is. I mean, I'm sure that generally in sexual harassment, that's going to be the case. I don't know that he's going to be making it. I don't even know if this is sexual harassment. Maybe he just made a pass at her. Now, obviously, if he did it the way she described, it's pretty inappropriate. But remember, these allegations were, over 10, 15 years ago. Who knows if she's remembering it correctly? There's always 3 versions to every story, her version, his version, and then the truth. And so who knows what actually happened that day in that car. I'm sure it wasn't as bad as she described. In fact, if it was that bad, she might have actually done something about it back then. She might not have waited until Herman Cain was the Republican frontrunner to bring up these accusations, and she wouldn't be doing it with Gloria Allred. Because obviously she's got something up her sleeve here. I don't think it's just purely she's coming forward purely out of conscience for the good of the nation. I mean, I doubt that that's really at play here. But in any event, the whole idea that this is a racially based issue, just simply because this particular woman happens to be right and Herman Cain happens to be black, is nonsense. I don't think anybody really who was thinking about voting for Herman Cain and who is now not supporting him because this latest victim happened to be white. But if this victim happened to be black, well, then it would have been okay. Well, as long as they're harassing their own kind, whatever. And again, these aren't my words. I'm trying to figure out what this woman was talking about. Then it's okay. But hey, they've crossed a bound now. Now that there's a white woman involved, hey. Now now this is a big deal. We got to put a stop to this. That's all nonsense. Anyway, let me go back to the phones. If anybody else has any opinion on this particular topic, it'd be an interesting point to discuss. But let me go to Rich, who's calling from Tampa, Florida. Rich, you're on
Hey,
Peter
Peter,
Show.
how are you?
I'm good.
Good. I'm sitting here. First of all, I've got an application I'm filling out, so I'll become a proud client of yours very shortly. Now, did you say you were out in Newport Coast, by the way?
Did I what?
I heard earlier that you were in Newport Coast.
Well, I mean, well, last night I was down in Newport Beach. I had a couple of meetings down there. In fact, I was in Newport Coast briefly, and I gave my lecture last night was at the campus of UC Irvine. So.
Okay, well, I just got back from out there, and what a beautiful area. But I wish I could have called you out there. But bring up a couple points here. I actually had a purchasing meeting there over at the Pelican Hill Resort, and ran into a lobbyist there with the group. And I just think that it's, and didn't have a chance to really elaborate much, but in our discussion, he was telling me about how he was meeting with the senators and congressmen over in Washington, and he said that he was just amazed at the level of unsophistication of the congressmen and senators when it comes to doing business. And I was just amazed at that. And then I wanted to ask you your input on this. I mean, you've been schooled in Austrian, economics. Do you really think that these, Harvard graduates, these economists at Bernanke and all these, these brilliant economists we're told that they're so brilliant, do you think they really truly believe in the Keynesian style economics, or is there some other motive here? I mean,
I think most of them believe in it, and they have a vested interest in believing it. They've been taught it. I think it validates a lot of their own insecurities, and because a lot of these professors, they don't make a lot of money. I mean, they're not really rich, and so, but they think they're so smart, and so they want to justify their lack of financial success by kind of vilifying the people who are successful, by kind of impugning their motivation and their character, and saying, well, the people who get rich do so on the backs of the poor. They cheat people. They're greedy, and I'm not like that, and so I can't be rich because I'm too honest. I'm too nice. I care too much about people. It's all a bunch of nonsense. They're trying to just rationalize their own failures, and I think they try to justify, their positions. But in politics, who knows what people believe? Because politics is a whole different animal. I mean, people will say anything in politics because their goal is to get reelected. And if being a Keynesian helps you get elected, well, they'll be a Keynesian. I mean, it doesn't matter what the truth is. The truth is whatever helps them is what they want to believe. But as far as your earlier point, as to politicians being so ignorant or congressmen being so ignorant about business, of course they are. Most of them have never been involved in business. I mean, most of the people in Congress are career politicians. There are some of them that had other careers before they went into politics, but a lot of the guys that are in Congress worked their way up through the ranks. They started in local politics and they moved up and they developed their political bases and they got to higher and higher elected office. And generally for most people, the highest elected office you can get is a national office, whether it's a congressman or a senator. That's generally, some people you can look at and go to a governorship, which is maybe you could look at a governor as being even more, having even more status than a congressman. But most of the people that are in local legislatures, that they're starting in state legislatures, or they start out city council members and they move up into a state legislature, ultimately they try to move up to Congress. But by the time they get there, they've spent their whole life in politics and they've spent no time in the private sector in business, and so they have very little understanding of how business actually works.
Well, they began their careers behind a desk, and they end their careers behind the desk. I guess you can look at it that way, and not from a business viewpoint. But do you think, what is the answer to that? Do you think term limits are the answer to that?
Yeah, I think term limits would be a good step in the right direction to make sure that nobody makes a career out of politics. I don't think we should have career politicians. I think we should have citizen politicians. I think elected office should be like jury duty, or maybe like Army, where there are some career military, but a lot of people join the Army, they do a couple of tours, and they're gone, and they go back to the private sector. That's how I want to see a time in Congress. It's not a profession. It's truly public service. You do it for a while, and then you go back to the real world. Anyway, hey, thanks for your call. We will be back. We've got another segment coming up here on the Peter Schiff Show on SchiffRadio.com.
I drink all the time. 'Cause we're lovers.
The Peter Schiff Show. Since the Peter Schiff Show was last on the air, the national debt added another $7.89 million.
Luckily, Peter's intelligence is growing twice as fast.
That's incredible.
Welcome back to your source of sanity in an insane world. It's the Peter Schiff Show.
And this is Peter Schiff here at SchiffRadio.com. We're coming to the end of another show here. Let me see if I can get through some of the last remaining callers in this segment. I think next up is Jeff calling from San Diego, California. Hey, Jeff, I'll be down in San Diego on Thursday. Got a number of meetings down there. Welcome to the show.
Thank you. Peter, I have a question about something called the Sprott Physical Silver Trust.
Yes, that's from...
Let me just quickly say that I am a Newport Beach Europac customer, and I also own physical silver through Europac at the Perth Mint. But this is about the Sprott Physical Silver Trust. So I'm trying to understand what makes it different, and I'm trying to also understand, that is to say, different than the SLV. And I'm also trying to understand a comment that I've heard in reference to it, which is that it has a very significant premium relative to its net asset value. I don't understand what that means.
Yeah, well, what that means is the Sprott Trust is a closed-end fund, meaning they have a certain amount of silver, and then the shares outstanding do not grow. So the amount of silver in the trust is a constant number, and the shares trade, and people can pay for them whatever they want. Now, when you have a closed-end trust, you can figure out the net asset value of each unit because you know how many ounces of silver are owned, how many shares are outstanding, and you can figure out how much silver is behind each share. Now, generally, what can happen, though, is since the share prices can trade based on supply and demand, let's say that silver is $40 an ounce, and a share, if you were to equate a share to an ounce, you could say, well, this share, I'm paying the equivalent of $50 an ounce for silver. So you would say that there's a premium, a 25% premium over the value of the silver. On the other hand, maybe you could buy it at a discount. Maybe the silver in there is worth $40 a share, but you're paying $30 a share. You'd be buying it at a discount. So the fact is, if you buy silver through this Sprott Trust, you're actually paying more for the silver than if you just went out and bought, let's say, SLV, or you bought physical silver. The main advantage to owning silver through the trust is that when you go ahead and sell the silver, assuming that the capital gains tax preferential is still there, you get capital gains treatment. So you get, right now, the long-term capital gains tax rate is 15%. So if you buy the Sprott Trust, you double your money and you sell it a year from now, you would pay a 15% tax. Whereas if you bought silver or SLV and you doubled your money, you would pay a 28% tax. So you do get more favorable tax treatment, but you also have extra elements of risk. I mean, let's say you buy the trust at a 25% premium, and when you sell the trust, it's only at a 10% premium. Therefore, you would have made more money had you just bought SLV because you would have captured the full increase in the value of silver. Instead, here you didn't get the whole increase because there was a decrease in the premium. On the other hand, you could buy the Sprott Trust at a 10% premium and sell it at a 25% premium, in which case you will make an additional gain beyond the simple rise in the value of silver because you would have been able to sell for a greater premium than you purchased.
Right. So right now it's trading at about 17% above its net asset value, which I guess
right.
Is
so
what
that
we're saying now.
yeah, that means you're paying that means you're paying 17% more for the silver than it's worth.
What was confusing to me about this was that when I plot the share price of SLV versus the Sprott Silver Trust over a year or over 6 months, it's almost identical.
Well, what that means is that premium of 17% has been very consistent.
Right.
So the premium has been there, and you're not seeing a lot of volatility in that premium. But see, what will happen is if silver really were to sell off dramatically and people were to just want to get out at any price, get me out, lots of selling, what you'll probably see happen is that premium might go to a discount, and it might end up going to a 15% discount. And that would mean that in addition to whatever silver loses, you would have this huge loss as the fund went from a premium to a discount. And
but
so
the opposite would be true as well, though, right?
Well, if there was a mad rush for silver, if everybody wanted to buy, yes, you could have an even bigger premium. But the premium is already 17%. But I think part of the key to buying these trusts is to try to look at a low point where the premium might be and try to pick it up when it's when the premiums are low. And you can maybe even arbitrage that between a regular ETF. But the main advantage is the tax advantage. But again, you have no idea if that's going to stay. The Congress can change the laws. They can abolish the preferential rate for capital gains anytime. So you never know. But anyway, hey, thank you for the call. Next up is Darren calling from Vermont. Darren, welcome to the show.
Hey, Peter. It's a great pleasure to speak with you. I have a question regarding the collapse of this fiat currency. And basically, like I believe I heard you earlier say to the gentleman from Parliament in England that you expect something in 2012 or 2013 maybe. I guess if you concede the point that the dollar is going away, my question is, I've also heard you say that you don't believe a one world currency would work. So what are the options for this country is my question, and I guess
I'm not saying the dollar is going away. I'm just saying it's going down. I'm saying the value of the dollar is going to diminish. The dollar is still going to be here. It's just not going to buy nearly as much, and it's possible it won't buy much of anything if we don't change course. But no, I don't believe that the demise of fiat currencies is going to ultimately give rise to one gigantic fiat currency. I mean, look at all the problems that we have in the Eurozone when you just have a few European nations trying to get behind one currency. Imagine trying to repeat that experiment for the entire world. So it's not going to happen. What I think is going to happen, if anything, would be a global return to the gold standard. That's a lot more probable than one world fiat currency system, is that we go back to the gold standard, because fiat currencies historically self-destruct. People get wiped out, they lose a lot of money.
You think the dollar will be declared dead like it was in the Weimar Republic?
Well, no. Well, I mean, I guess we got rid of the Reichsmark, and now we have the Deutschmark. But, I don't know if we're going to have the old dollar and they're going to come back and make it the new dollar. I mean, you don't necessarily have to, change the name of the currency. But might we call it the new dollar or dollar 2.0? I don't know. That seems to be the lingo of the day, dollar plus, whatever we could do. I mean, that's possible but that would only be in the event of hyperinflation. Look at the lira before they got rid of the lira. I mean, they never, at one point, it was 10,000 lira to the dollar. I forget what the exchange rate was, or some 8,000, I don't remember, but before they went to the euro. But, we could certainly debase the dollar to the point where the smallest bill in your wallet is 100, and the largest bill would be 1,000 or whatever, 10,000. We don't have to go to a new currency. We can just add zeros to the currency that currently exists. Now, if you add so many zeros that maybe you got to start all over again. But, hey, look how long they took the Zimbabwe dollar. They printed those things into the trillions without having to go to a brand new currency. Anyway, hey, thanks, everybody, for calling in and listening. We'll be back again tomorrow for another 2 hours of the Peter Schiff Show here on SchiffRadio.com, the gold standard in talk radio. Bye.